Welcome to the Daily Brief. This is being prepared Wednesday, August 10th, where I'll briefly cover the high points of what happened in the market on Wednesday and then see how things look for Thursday, August 11th. And this is the short video. I appreciate a lot of the feedback that you've been giving to me. What it looks like I'm going to do is I'll do the longer full-blown video because some folks really like that. I'm also going to prepare just a short overview, or what I'm going to call the daily brief for right now until I come up with a different name. And so then you have two things to choose from. You can first view the shorter video if you like, and then if you are looking to make some decisions or really want to have the time and ability to study things further, then you can go in and look at the longer version of the daily video. I'm recording this first before I've even finished preparing the regular daily video update, because when I recorded the short video for Wednesday's session, within about 3 minutes, the power was shut off for many, many hours, and I couldn't have done a daily video update, the long version, anyway. Well, there's a chance that that may happen again for this video, so I wanted to record it first. I may miss a few insights because I haven't really studied through all the charts and prepared everything yet. So if you want more information, I will be posting the daily video update just as soon as I can. So it ended up being quite a positive day. The CPI came out and it was considered to be market friendly, and that shot everything higher. So let's go back and talk about what happened right at the open. Man, we had a gap that I haven't seen in a long time. Because of the narrow range, specifically on Tuesday, that made our pivot points quite close to each other. And we shot up above R1 at 41.36, R2 41.49. We got all the way up to R3 at 41.74. And my goodness, we even got up to R4 at 4,200, which is a round number. Some folks see that as a resistance level. We got a little bit above that. So that is considered to be positive, but it was a pretty big move overall. And it's really helped the technical picture quite a bit. Once we shot up to about 4,200, prices chopped above and below R4. We ended up closing at the high for the session, and we were up 2.13%. So a good solid day. And the market is seeing this as quite positive. We're still below average with the volume, and the technicals have switched back to pretty much more positive. We might have a few short-term overbought indications because we've been chopping the last few days, and then to see a big move up might shoot some of our indicators into extreme positive territory. Of course, what's causing this? Inflation fears, interest rate fears going up and down, the CPI, which is the biggest report to give us about what's happening with inflation, the whole list of geopolitical concerns, earnings that are coming out, and then the definition and debate going back and forth about, are we in a recession, are we not? Mainly because of what we're seeing in our economic reports. But at the same time, we're seeing a very strong employment situation right now. And that is usually what we don't see. So it's making it a little more gray. All right, so let's make some comments. And unfortunately, this will be a little bit small. There's a lot to cover right here. The CPI was lower than expected, and it did decline. Growth led the way higher. And what that has done is really help our positive setups to improve. There were a couple of statements made. The Minneapolis Fed, President Kashkari, who is a voter on the FOMC, said that he thinks that the terminal rate, where we're going to top out, is at 3.9%. And he also said that the Fed is far, far, far away from declaring victory on inflation. Okay, fine. Then you had another Fed president who's not a voting member. He expects the rates to top out at about 4%. But also said, if things get better more quickly, we cannot raise rates quite as much. So again, even within the committee, you have people saying, well, maybe things are getting a little better. Other people are sticking to their, we need to conquer inflation and we're going to do whatever we can until that happens. But we're seeing a little bit of dovishness start to creep in. Now we need to see, can the CPI, can other inflation indicators that we have, can they also suggest that maybe we've topped out and we're starting to come down, which would then allow the Fed to pivot from an inflationary stance to, okay, let's help the economy stance. And usually that means by lowering interest rates. Our rotation, it advanced, and the positive setups are still looking pretty good. We still have some inverted yield curves. Fear is right still at neutral. Interest rates declined overall in the session. Oil, I think it's still below 90. Again, this is one of those things I haven't really checked into yet at the time I record this. The CPI was unchanged on a month over month basis, where they expected it to be up 0.2%. And then on a year over year basis, that makes it 8.5%. Now that's really, really high, but you have to look at this in context. We were at 9.1% last month, and now we've dropped to 8.5%. So even though that's really high, at least it's starting to come down. And that's what the market really picked up on. The core CPI, when you take out food and energy, of course, the things that you have to have, it was up 0.3% on a month over month basis. They expected it to be up 0.5% or 0.5%. So that was less than expected. And that is a 5.9% year over year basis, which is the same as what we saw in June. So that seems to indicate that things are settling down. The weekly mortgage applications index, it was up 0.2%, where last week it was up 1.2%. Wholesale inventories, this is a little bit negative because wholesale inventories, that means companies are making things, and instead of shipping them out to be sold, they're having to store them. They're just sitting on their shelves, so to speak. It was up, but not as much as they expected. They expected it to be up 1.9%. So that's seen as a little bit positive. Our trend is positive right now. I've switched the bias back to positive because we had a really strong up day, and the momentum I've also switched back to positive. Now we've had 3 or 4 negative days, but they were small negative days, and the market was pretty much going sideways. That's why I can so easily switch this back to positive. And again, we'll be analyzing things to see, are we going up a little too far too fast? Are we getting a little bit overbought with some of our indicators? And I'll discuss that in the full length video. So what's our outlook? We're pretty much positive with sentiment being neutral now. The PPI is coming out on Thursday. And then the jobless claims. We'll want to start really keeping an eye on those, and the whole list of geopolitical events, with the interest rates and inflation being the big one right now. So our scenarios, we're not really going down, but we could for any of these reasons listed right here. The technicals are positive. We are looking positive overall because you still have a lot of folks. I still see a lot of videos on YouTube and emails that I get, and folks are saying, this is just the bounce before the crash. And that could always happen, but we're not seeing a lot of evidence in our charts for that right now. And then the PPI could freak the markets out, and we could be having a lot of trouble in Thursday's session that we did not have in Wednesday's session. But the PPI is not as influential as the CPI as far as how it'll affect the markets, but anything can always happen. Our scenarios, rotation, and setups, they're all looking pretty positive. Our technicals are really improving right now, and we're not in a sideways trend because the ADX is above 20 and it is positive. So overview, right now, the S&P is positive, short-term positive, intermediate-term positive, but long-term, we are still negative overall. So thank you. Please look at the daily video when I get it posted, and I'll go more in depth and have lots of charts to show you. And I hope you find this video helpful.